this is Jussi. I run a small investment firm that specializes in REIT investing, and I'm today in Rome, Italy, enjoying the beautiful weather. Actually, I have the Colosseum in my background. I think you can see it a little bit through the trees. I want to film you a quick video to give you my live reaction to the Fed's decision to cut interest rates not just by 25 basis points, but a full 50 basis points. I think that this is huge news for real estate investment trusts. It's great news for REITs. I mean, this is something that we've now been predicting will happen for about 1 year. So we're very happy to see finally our investment thesis play out. And if you've been listening to our videos, I'm sure you've noticed that REITs have been surging in value over the past 6 months to 1 year. And this is simply because, the REIT market is forward-looking. Investors were not waiting for interest rates to be cut to start buying them. As soon as it became increasingly clear that the next move from the Fed would be to cut interest rates, investors started buying REITs, and this explains why they've now surged by about 40% on average over the past year. And many of the smaller, lesser known REITs in which we invest have actually risen in many cases a lot more. As an example, our biggest holding, which is Essential Properties Realty Trust, has now surged by 60% over the past year. And so I think that buying it now is a bit too late. It's not that attractive anymore. But even then, I remain very bullish on REITs, and that's really the main purpose of today's update. I want to let you know that I think that there is still a lot of upside left in certain types of REITs, but clearly now is a time to become more selective with your REIT investments. It's not as easy anymore to capture gains. You cannot just expect to invest in the biggest and best known REITs that have strong balance sheets and large followings from analysts and expect exceptional returns going forward anymore, because those aren't that cheap now. However, there are still quite a bit of REITs, I think, especially in foreign markets, that offer quite substantial upside potential, and this is especially true in more complex situations. And that's what we cover, by the way, at High Yield Landlord, which is my REIT newsletter. So if you want to access my full portfolio, there's a link in the description to a 2-week free trial. Why do I think that these REITs will keep rising higher? And it really boils down to two things. And firstly, the Fed made it very clear that it will be quite aggressive about its rate cuts going forward. It started now with a 50 basis point cut, but if you listen to the commentary, they also made it clear that they will keep lowering interest rates, and they will be quite aggressive about it because inflation has now cooled down to the lowest level in a very long time. If you look at the data from Trueflation, which is a private market measurement of real-time inflation, they currently have inflation at about 1.2%. So I hear a lot of people say that today's interest rates are actually not high compared to historical standards. And yes, that is true if you look at nominal interest rates. But if you look at real interest rates, so adjusted for today's very low inflation, then the real interest rates are actually quite high today and restrictive to the economy. The Fed is well aware of that, and that is why it's now quite aggressively cutting interest rates. And the debt market is actually predicting that interest rates will be cut by another roughly 200 basis points over the next year or so. And that's really big, obviously, for the REIT sector. If that's going to happen, I will expect a lot more buying in the coming year, because right now, even following the 50 basis point cut, investors are still able to earn a nearly 5% yield from their money market funds and short-term treasuries. But if that 5% now turns to 2.5% or even, let's say, 3%, it's a really big difference. There's a bit of a psychological element. If you're able to earn over 5% yield on fixed income, I think that pulls a lot of capital towards fixed income, and that is why REITs crashed over the past 2 years. But now we'll see the opposite happen. As that turns to 3%, that really isn't that attractive anymore to a lot of investors. It's tough to get ahead with just a 3% yield, especially once you deduct inflation, you deduct a bit of taxes. You're really not left with much at all, and you're not really getting ahead. You're at best preserving your purchasing power. And so I think that a lot of this income that left REITs, a lot of capital, that left REITs to fixed income will now gradually come back to REITs, and this will keep pushing them higher. But as I mentioned earlier, you have to be now more selective. Simply buying the biggest and best known REITs, Realty Income actually has a bit of upside left, I think, but some other example could be Prologis or Public Storage or so on. I don't think that they have so much upside necessarily anymore. But if you're selective, you can still find great value. There are some REITs that are still very heavily discounted, even following the recent surge. And so for this reason, I expect to keep buying REITs, and I'll keep sharing videos of my latest purchases on this channel. But yeah, I mean, in short, I'm very pleased to see our thesis finally play out. I'm very happy if some of you have been able to profit from this rally if you listen to my videos over the past year. And if that's the case, please click the like button. That helps me a lot to keep growing this channel. It helps the algorithm. And then secondly, I mean, if I can ask for a favor, check out our REIT newsletter. Take the 2-week free trial. This will give you access to my entire portfolio. You'll see that we are making big moves at the moment. We are selling some REITs that I think are approaching fair value, redeploying proceeds into better new opportunities. We're also posting a lot of interviews with REIT CEOs at the moment. We're really doubling down on our research to make sure that our portfolio remains best positions to capture gains following these rate cuts and this recent rally. And otherwise, let me know in the comment section below what REITs you're buying at the moment. Thanks so much again for your interest, and see you at my next one. Bye-bye.